going to go and get Nic Chahine here in just a minute, and he's going to give us his comments here, probably on Alibaba. We got to get what his thoughts are on here, especially if he's read this Wall Street Journal article, if he has any concerns with this or not, because Alibaba does continue to drift low, and like you just pointed out here, Joel, we are dangerously close to all-time lows here on Alibaba.
Alibaba will get his thoughts on Google, Facebook.
Morning.
There he is. There he is.
Yeah.
How you doing, Nick?
Everywhere I go, here I am.
How's it going?
I'm going very good. How about you guys?
Well, not too bad. We were just talking about Alibaba. I'm not sure if you had a chance to read the Wall Street Journal here today, but they're talking about Alibaba e-merchants conducting fake transactions. It sounds a little bit scary there.
I did not read it, but I had the privilege of listening to you tell me about it. So I am now up to speed because I listened to your show.
Excellent. That's what we like to hear.
Remember when I told you I was bullish long-term Alibaba? It's a long story, but I always
as long as they're not lying.
Yeah. I said as long as they're not lying, it's a long-term buy. So now there's way too many chatters about lies from different people and different sources. So I stop adding the strong, big-size longs. If I want to still go long on just the chance that this is another fake headline or a wrong headline or not totally accurate headline, you can nibble on it on the in calls. But it sounds like you are going to make money on it via puts, so that's great. It did have resistance this week, but it also had support, and this morning it looks like it's piercing through the support. So I wouldn't touch it with big size money right now until this, lying, not lying thing gets resolved. So that's my thoughts on Alibaba, which is a shame because it looked like it's going to be another leader in the globe, and right now it's iffy.
When you talk about playing it for just short-term pops, you're just talking, maybe trying to, if you see a technical setup, trying to play it on the weeklies, or do you actually do it with the actual stock, or do you sell some puts if they get a little bit juicy? What's your preferred strategy?
I won't sell puts because if it's a headline thing, selling premium may sound juicy enough with the premiums, but I don't like selling into headlines. I'd rather play after the headline when I actually have a scenario around which I can plan something. So I would buy either cheap weeklies every week until it pops, or I'll buy a midterm, like I'll go out to March or April and buy some call spreads or maybe some broken wings, like you set up a call fly that's a little lopsided to not make the eye of the needle so tight, so to speak, and make it work. So you'll spend 100 and it's leveraged, so the 100 has a chance of making quadrupling if you play it right, the levels. So I'll do it that way, but I'm not pressed to do it anyway. There's plenty of other stocks you can play with right now.
Okay, other places to put your money, like Priceline.
Right. Yeah, these days I find myself, even if you're uber bull, you have to admit that there's a lot of areas of opportunities to short that are popping everywhere. I did short Priceline recently, and let's see how that works out. It's on a short leash, and I did make money on it the last couple of weeks just doing that. At 1260, it kissed it again, and then it reverted down from it. It seems like a level that is attractive enough to test a short out there. Same with Amazon. I know it goes against everybody. It's running like crazy, but if somebody wants to throw a credit call spread in Amazon, it's not a bad deal if you know what you're doing. Maybe puts if you want instead. I am short Apple via puts, and it looks like this morning Apple is 128 or something. I don't need much. I need a couple of dollar drop from Apple, and I'll make some money on it. It's not a big short, but it's big enough to make me smile, and it's not big enough to make me cry badly about it if I lose it. So the markets are shortable. I am more short via credit call spreads than long. I booked all of my longs if I had iron condors, and I didn't add longs because I don't have conviction in the bull thesis, because it seems like we popped on Greece and all of that. And where is the next level up going to come from? There was no change fundamentally that tells me, okay, here's the thesis on the long term from here. Yes, we got to 5,000, but we got it on the back of froth. If you notice, the last 3-4 days that got us up to these levels that made them attainable were the backs of momentum stocks. And those guys, they're the definition of froth, or at least perceived froth. So
yeah, keep going. Continue with it.
No, so caution is warranted at this level. I want to see where is the next leg up going to be. And what worries me is that we had two things leave the headlines. We had Greece and Ukraine. They were like every day, is it going to be good? Is it going to be bad? They're gone. So they're going to be replaced with something. And I'd like to nominate China maybe, or global growth. You guys talked about steel earlier. Isn't that a good measurement of global growth? And I don't know. I mean, there's a lot of questions around the China growth, for example, and why would they cut rates? Why are they so aggressive right now in sprucing their economy? Is there a big number coming from them, or I should say small number coming from them?
I do just want to talk about Alibaba here again. It's breaking down below 83 now. I did jump in and look at this Wall Street Journal article, and I will post it over there. It's about the merchants, though. The merchants are using fake orders, not Alibaba, to gain prominence on Alibaba's marketplaces. So it's about the merchants themselves, the people who are selling stuff on Alibaba, that are potentially using the fake orders. So it's not Alibaba itself. And Alibaba is saying that they do not, they've commented here in the article, and it says that they do not condone the use of these fake orders. So basically, they're trying to get that stuff off the site, but I guess there's just a lot of corruption from little merchants over there.
Yeah, so
it's not really a direct.
I guess it's plausible deniability there on their behalf, but
Right.
what's the magnitude of the fraud is really the question mark. So if the magnitude is a small number, then the stock should recover because it's a non-issue. They'll cut the bad apple or the piece of the bad apple and just keep. But that's why when they tell you there's issues with bookkeeping and whatever, step away until you get a clearer picture. That's why I said I won't dedicate big money, but I'll take a lottery ticket. And you asked how maybe a cheap lottery ticket for the weeklies, like something that costs pennies and will turn into $1 if you're right on a spring back. But right now it's through 82, which I think, if I remember correctly, 82.5 was their last serious support. 80 is the next one based on the open interest. But at this point with headlines, the open interest goes away with importance. I don't give it as much importance when there's a headline. You can see Google, it ran against open interest because of a headline, upgraded, I think, Bank of America. So it's running up. Maybe it's time to start shorting Google a little bit. But nothing too serious yet. But I do have, a lot of, everywhere I look, I see opportunities to say, okay, maybe they're overextended here, maybe they're overextended here. And then you add to it the fact that the whole market is at all-time highs or pretty darn near with the NASDAQ. Then you start thinking, okay, maybe I should start hedging my bet a little bit if I'm long.
I think you make a good point here. Just kind of like when momentum gets going one way, and when you had Alibaba making its run up to new all-time highs off the IPO, from us talking about big buy imbalances to the street just absolutely loving it. And now, what about we're the analysts on this thing? I don't know when the last time we had an analyst move on this, but now you might start coming out with, some downgrades or some, price target reductions. And then on the opposite coin, Apple. I mean, good news, everyone raising price targets. Just seems like once the momentum gets going one way, it's really hard to turn the tide.
Right, and even if it makes sense the other way around, even if you have a really good argument to do the opposite of what's going on, you just have to go with the flow until the flow starts going the other, or starts realizing. Like Apple, everybody's so euphoric about Apple. They can't do anything wrong, and they even popped on them making a car. That's the reason to sell Apple, in my opinion, them making a car. Are you kidding? And it's had lower highs since the 133.66 high from a few days overnight. Lower highs, and now it's knocking on the level of a 128-ish, and it played with fire yesterday. It could have broken down yesterday a few times, and the day before. So every day it's like teetering, and everybody loves Apple. Do you know anybody that doesn't want to own Apple? I don't, and so maybe it's time to take a few puts in Apple if you own a lot of stock,
Yeah, crowded trade. That's there's no doubt everybody's been on the Apple bandwagon here. It seems like really for the last time, think about when it got this crowded and everybody was on the Apple bandwagon. That was the end of 2012 when the stock had went up to $700 talking before the 7-for-1 split, and then pulled all the way back to 380. And everybody hated it at that point in time.
And you remember that? You remember that one guy that gave it a rating of 1111, and everybody made fun of him? Yeah. I think that's $157 or thereabouts, right?
Yeah,
and now
so
they have price targets way higher than that now. So
they do have the Apple. event next week, so obviously that could be a catalyst there to kickstart the
Yeah.
stock ahead of the report there, so or ahead of the event.
Right. Long term, the company is fantastic. I have no doubt in my mind. And unless they change their way of, I wonder how much of this stuff that's coming down here is still momentum from Steve Jobs. So was he working on Apple Pay? So what has come from Tim Cook from zero, like Tim Cook's idea or Tim Cook's team or management team idea from scratch? Is it the headphones? Probably. Is it the Apple Pay? I don't think so. I think it was in the works from before. I'm just speculating. I don't know. And so the Apple thing is long term. I don't fight the company. The company is fantastic. In fact, it's responsible for what, half of the Nasdaq run up in the last year, at least. I'm pretty sure of that.
Did you?
So 40%, if not half. And here's another thing. How much is the Apple weighting in the Nasdaq? I know I've heard people say 10%. There's no way it's 10%. If you remember the last time they reweighted it from 20-something to 12, down to 12. How could it be 10% now?
Yeah, you sent me something on that a while ago, and I haven't heard any news on it. So you're thinking if they do a rebalance or reweighting, that could put a little bit of downward pressure on it.
It mathematically will put a downward pressure. Don't all the ones that mirror that same index have to change their weighting in Apple in order to mirror that weighting in there? So they would have to sell it to mimic the math. So, just short term, I would be a little worried about it just because how fast and how strong and how fantastic it's been. But I just did it via puts. I didn't go out and take huge credit call spreads against it. First of all, it's got an event coming. And second of all, I think it's a good company. I just want to take advantage of an overextended, too fast, too soon, whatever, too high, too fast, whatever they say. I usually make fun of them when they say it, but this is like a perfect example of what they mean.
What do you make of this Best Buy chart here? They came out and said everything right this morning, popped up here. I know you're not a big chaser, but, what if you came in long on this thing? I guess if you came in long, you should have sold a little bit ago. Dennis had talked about that $40 level. Any comments on Best Buy?
Yes, as anything else, any green I see, I book. That's the acronym I made, AGSIB. Any profits I have, I book them early. Leave money on the table. I don't care. This environment for the last year has not left us too long to book our profits. One day you got profits, the next day it's gone. So if I have profits, I'm booking my profits early. I'm leaving money on the table. I'm closing shorts that are profitable for me. Some stuff I sold, collected 80, 90 cents. I see it down for 30, 40 cents. I book it. Yes, I'm still confident that they're going to work out, but why chance it? I'm booking some along the way. I'm closing longs. I'm closing shorts. I'm booking both sides here and there. I'm leaving money on the table, but at least I'm booking profits as opposed to saying, uh-oh. So Best Buy, it should have some resistance here, but I don't know the spirit of theory. If we spent more money at Best Buy because we saved on gas is going to be cheaper for how long? I don't know. It's been playing around with the $40 level too much, 50, 51 and breaks down immediately. So if I look back at 2 years on Best Buy, I could draw a box around the 40, 42 level where it's been death for it. Even recent history, it reaches 40, kisses it and drops, reaches 40, kisses it and drops, and then gaps down and then tries to claw its way out. And now it's around 40. I'm not looking at it this morning. If it's around 40, that's a level I test a short on it via maybe put spreads if I don't own the stock. If I own the stock, I'll book some profits. That's me.
Nick, just to update you on the weighting, I did go while you were talking there and look at the weighting. I don't have it in the Nasdaq, but I looked at it in the QQQ, so the triple Qs, and it is 14.89%. So almost 15% of the Qs. So it's a huge component in the Nasdaq 100 there.
How live is that number? Is it live?
I think they update it. Yeah, I think they update it fairly regularly. So I'm trying to see when it was updated. It looks yesterday. As of yesterday, it was 15%.
I eyeballed it at 20. Just me eyeballing it. So and doing a dirty math on that. But 15% is it's a massive chunk.
Yes,
it's a massive chunk, and especially when it's responsible for almost half of all the run up. So if I was managing that index, I would want to maybe lighten it up a little bit, especially that they have so many other fantastic companies that are up there. So I think not legally, I think there are rules. They don't have to reweight it until it reaches 25%. And I think something like the top 5 can't be more than half of the whole index or something like that. Then they have to reweight. But anyway, you were saying?
Another stock trading quite a bit higher, at least when I pulled it up last time. AutoZone here. Do you mess with these $600-700 stocks at all? I know you do a little bit in Chipotle every once in a while.
Yeah, but this stock, AutoZone, is just up and away. I mean, why would anyone short that? Pull up a 5-year chart on that. Oh my gosh! I mean, the linear regression line is just insane. I mean, whoever wants to short the stock has a death wish or something. But on any drops, I'd go for it. Like those 3 red candles recently, I don't trade it. If I do, I'd buy every third candle that's red. I'm looking at the chart. Every third candle that's red is a buying opportunity for that stock. That's insane. They must have excellent management. But here's the thing. Let me propose this to you. Now, we've had some incredible auto sales this year. So my theory was a couple of weeks ago is that where did that money go that we saved on gas is we reinvested it in buying new cars or replacing our cars, I should say, new or used, I don't know, the breakdown. Will that hurt these guys forward? So up until now, we've been reinvesting in our cars by fixing our cars, but now that we found more money in our pocket, say, you know what, I'm just going to change my car.
Well, it doesn't seem to have happened as of yet. Let's go to a little bit lower price of a stock. I'm not sure it's a biotech, but once these things get going in one direction, they kind of get hard to stop. Mankind, MNKD, is this something you follow or just too low price?
I have a few people that ask me about it, and I may have notes on it, like on the 5th of February, I had notes on it, and let me see here what I said about it, and let's see if I was smart. I said more comfortable under.
You got notes on your desk too.
Say that again.
I said we were talking about Dennis having notes scattered all over his desk. I guess that's something.
That's what traders do. They scatter notes everywhere.
I scattered them on the actual chart, so I don't misplace the note.
Oh, good job. Okay, what did you say on the 5th?
I said it had on the 6th it had open interest resistance at 7, and then for February contract it also had it at 7. So it looks like it pierced through 7, went to 775, and then reverted down to under 7. Let me see when it dropped down. It was still it in February it respected the open interest resistance at 7, so they didn't let it close at 7. I still think that this is an area of if you pull up a 2-year chart, you can see like a peak that crossed out up to some huge levels. I don't know what on like June of 2014. But it looks like the price is more happy playing around between 6.25 to 7.5, and that seems where they want to trade it at best. But actually, the most time it's traded, it's a little lower than that. So, fundamentally, I don't know a lot about it. But if I'm looking at a chart technically, it's like this price is happier at best at 6.5.
Okay, we've been on the line with Nic Chahine. He's a Marketfy Maven and author of Create Income with Option Spreads. He joins us every Tuesday here on Benzinga's Pre-Market Prep. Nic, you sounded better. Sound like you're recovering. You sound good. Thanks for coming on. We'll talk to you next week.
Absolutely. Thanks, guys.
Thanks, Nic.